Hi, and welcome. You're listening to the X22 Report. My name is Dave, and this is episode 915A, and today's date is March 10th, 2016, and the title of the episode is The Manipulated Markets, which are used to hide the economic collapse, are breaking down. Now, before I get started, I just want to make an announcement. I just uploaded an interview with Wolf Richter, so you can go right over to the X22 Report Spotlight YouTube channel. You can see the interview there, or you can come over to the x22report.com website, scroll down a little bit, look over to your right-hand side, you'll see the video there, or you can go to newssentinel.com. All you need to do is scroll down a little bit, look over to your right-hand side, you'll see the video there, and you can view it right there. Let's get right into the economic collapse financial news. Now, we had a crazy day on the market. We saw the market was down quite a bit. We see gold is surging, and we see that things are starting to break apart. And what's very interesting is that the corporate media was out there, and prior to the ECB making their announcement, Draghi making his announcement, which completely manipulated the markets, because this is what they do at this point, we had headlines like Wall Street gains as weak data spurs stimulus hopes. And then as soon as the ECB made the announcement, all of a sudden we get another thing saying Wall Street surges as data points to economic recovery. And then all of a sudden the market started to fall apart. The rally started to end. So all of a sudden we see European stocks turn lower as ECB says more rate cuts unlikely, banks up. And we see that all of this was completely manipulated. It was manipulated to push the markets higher, and it didn't work. The markets came down. They're doing whatever they possibly can at this point to keep this system alive a little bit longer. And it's getting harder and harder as time goes on. What's very interesting is that the initial jobless claims here in the States, they're saying that they're at all-time lows at this point, near 43-year lows. And we know these numbers are manipulated because when we look at the ISM manufacturing employment, the ISM services employment, they are skyrocketing upward. So we're seeing more and more unemployment in these areas. We know that retail unemployment is on the rise. So where are they getting the numbers for initial jobless claims at all-time lows? We can see at this point that every single thing is completely manipulated. Right now, during this real estate recovery that the U.S. government central bankers have told us we're in, but if you look at home sales, if you look at mortgage applications, you see it's flatlined. We've gone nowhere. It's a little blip up from where we were back in 2008, 2009. Yes, prices have gone up, and they're able to manipulate that because they can tell the banks, listen, the foreclosed houses, don't let them on the market. You keep the inventory off the market, guess what? People think there's no supply, so prices go up. We have foreign investors. We have hedge funds, investment companies, purchasing thousands upon thousands of houses, keeping them off the market. Why? To drive the prices up. And this creates a bubble. But we have 6 million homeowners still underwater. And this is during a period where they increased the prices of their homes using bubble tactics. And we also see that 820,000 of those borrowers owing the bank twice the amount their homes are worth. And this is coming from Zillow Negative Equity Report. So when we look at this, we have to scratch our heads and think, okay, if this is during a period where prices have gone up, not everywhere, in certain cities we're seeing prices come down. I'm seeing houses longer and longer on the market, prices coming down. The real estate market is crumbling and falling apart. What is going to happen to all those people that purchased homes, to all those hedge funds, investment companies that purchased homes, to all the foreign investors that purchased homes at the height of the market, at the height of the bubble. And when this comes down, we have the 6 million plus now everybody else, because when the real estate market, the bubble pops, it's going to be worse than 2008. Prices are going to drop twice as much as they once did. So that 6 million number is going to skyrocket. And it's going to be absolutely awful. We see that the rallies that we're seeing right now in iron ore, copper, Baltic Dry Index, stocks, well, it doesn't seem they actually pass the sniff test. And when we look at this closely, has anything changed? Has the economy gotten better? No. Has retail expanded? No. Corporate revenues? Have corporations making more sales? Are they bringing in more money? No. Is manufacturing getting better? No. Is the service sector getting better? Actually, it's declining now. Is the restaurants, the food industry getting better? No, that's declining also. So what's changed? Nothing. Actually, things have gotten worse. And what does this tell you? It tells you that nothing explains why we are seeing these rallies. Because we're not seeing any of this. This is completely fake, phony, and false. It is driven by the central bankers, the U.S. government. They are manipulating the market to make everyone believe that we are still fine. And this is what we see during the end game. It is legalized looting and financialization. And you can see the market is fluctuating up and down because it really wants to go down, but the manipulators are keeping it up. And we're seeing that as we move forward, it's going to be harder and harder for them to keep the system alive. Think about this. Global liquidity has collapsed right now. It has collapsed back to 2008 crisis levels. Now, the last time that this happened, guess what happened? We went into the Great Recession. And we're seeing it right now. We're exactly where we started from. And this doesn't look good moving forward. And everything that we've been looking at, all these economic indicators, shows you that we are headed for this incredible collapse of the entire system. Now, during the Wolf Richter interview, he believes that this is going to be a slow decline of the crash, unless the bubbles pop and then everything just falls apart. We have other people out there saying that this entire thing is going to come down very quickly. I believe that this is going to come down very quickly because when I look at all the economic indicators and everything that we looked at, it shows us that this entire thing has been manipulated and they're going to lose control eventually. And if they don't lose control, they're going to bring it down on their own. Now, out in Saudi Arabia, we see they are running into big problems. We understand they're suppressing the oil prices under the instructions of the United States to put pressure on Russia, to keep the economy alive, to have people have extra currency in their pockets to go out and spend in retail, but that's not working. It's also allowing corporations to bring in more revenue because the cost of deliveries, the cost of production, the airlines, the cost of flying has gone down. But guess what? They don't have to lower the prices. If they keep their prices where they were or just drop them a slight percentage, they're able to make profits, and a lot of the companies are able to stay in business. Now, if all of a sudden these oil prices skyrocketed, we would see a major financial problem right now across everywhere. Everything would just come to a screeching halt. And this is one of the reasons they needed to do this at this point. But we can see Saudi Arabia, they're in big trouble. They're looking to borrow 6 to 8 billion. And this would be the first significant borrowing by the kingdom's government for more than a decade. This is how bad it's getting. Out in Ukraine, we see that Kiev is going to sell Ukrainian coal mines as part of the country's plan to privatize their state assets. Kiev is collapsing. They're selling off bits and pieces of the country. And China is going to control the global silver prices. The CME Group, which runs the process for price setting of silver in London, said Sunday that China Construction Bank will officially join as a member of the silver price process, putting it alongside HSBC, JP Morgan Chase, the Bank of Nova Scotia, Toronto, and UBS. This is the first time that China will have direct influence on this price. This is also a sign that precious metal markets are increasingly going international. Now, we notice that everything is moving from west to east. China is taking control of the silver prices. China will be taking control of the gold prices. And eventually what we're going to see is the prices of both of these metals, because we know that China purchased a lot of precious metals. So did Russia and many other countries, not the U.S. We will see this rise. And we know in April that we're going to see the yuan-based fixed price on gold, and that system comes online. So what we're going to see at this point is everything completely change. And we're already seeing gold rising. And like I said in the past, when we see them lose control of the precious metals market, and that continually rises, this is a signal letting us know that we are headed down that path and the collapse is on its way. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.